Hey everyone, welcome back. So today is Friday. Weekend is finally upon us. I had a great day in Bitcoin today. Had a pretty good day in some of the mining stocks as well. Some didn't do so well. We'll take a look at those as well. Two things I wanted to cover is Annie got a letter from Nasdaq. We'll take a look at that. And we also have a story on Ethereum going over to proof of stake, Ethereum 2.0 basically. So we'll take a look at that, see what that means as far as transactions go, speed, burn rate, all that stuff. So we'll take a look at that as well. But as always, not financial advice. You know the drill. I'm investing in foreign companies. And for full disclosure, I did actually end up selling Coinbase today. I kind of licked my wounds on that one. I bought it at the IPO. Lesson learned, never buy on IPO. And I did buy some more Rivian for full disclosure, so you guys are aware of that. All right, so let's take a look at the miners here. We'll look at Bitcoin here in a little bit. But Annie was actually down today, 1.54% on the day. And they are at $1.92. Argo was actually up 11.11% to 90 cents today. So they had a great day today. And we're kind of seeing a little bit of a uptrend on them. Bitfarms was up 1.84%. It was up higher today, but it came back down a little bit towards the end here. So it's at $3.88. Cleanspark is at $11.96. It was up 6.98%. It was up also higher than that. It's up a little bit right now in the after hours to $11.99. Core Scientific was up as well, 3.02% on the day to $8.87. Digihost was up 2.52% to $2.85, and it did touch the 20-day moving average here, but obviously fell below it. DMG was down today a lot, 11.76% to 44 cents. Not sure what caused this. There wasn't any bad news or anything like that, so I'm surprised that one went down that high. I think maybe just people taking profits. We had 3 straight days of it going up, so I think maybe people were just taking profits on that one. Hive was up nicely today as well, up 4.64% to $2.03. Hut 8 was up 3.59% to $5.77. And Iris Energy was actually down quite a bit today, 8.92% to $13.17. And it is battling now with a 50-day moving average. It seems like we've had a couple-day sell pressure on it. Looks like we've had 1, 2, 3, 4, 5, almost a week worth of sell pressure on it. Could be from the fact that it did kind of pump up a little bit here in the past prior week. So that could be causing it. We'll see how this continues going on. And then Marathon was up 4.73% to $27.92. It is above the 50-day moving average as well. And we'll have to see how this one plays out as well. We're looking at the MACD here. We're getting another signal of green bars. It might be changing, so it might be going up higher here. We'll see how that one continues on. Mawson was up huge today, up 23.51% to $4.78. It's down a little bit in the after hours. Obviously, Mawson provided their operational update for February, and they were the only miner that was actually improved as far as Bitcoin mines from month to month. So January they mined X amount, and they actually mined more in February, while all the other miners that I cover were actually down for the month. So that was kind of surprising, and I think that's probably why it is pumping here a little bit today. Riot was also up 5.97% to $19.53. And it is also above the 50-day moving average here. So maybe we'll finally get a nice little rally going here with the mining stocks and Bitcoin. So let's take a look at Bitcoin here. Bitcoin is now at 41,838. Yesterday I talked about, obviously, the Bitcoin expiry, which happened today. So the bulls were able to basically take control of it, and they, I think, finished above, obviously, the closing price for it. So the bulls were in control. And I did talk about yesterday that, the line here, 40,700, was a crucial line to hold, and that we touched it many a times on the 1-hour chart. And I said the more times we touch it, the likelihood of us going below it increases. And we did have that happen here. We obviously went below it. We bounced, came back down, bounced off of the 20-day moving average here, and we went back up on the day. Throughout the day, basically, since this afternoon. So that was good. We'll see where Bitcoin goes over the weekend. Bitcoin obviously could be a little choppy here on the weekend. We'll see how it goes. But we do have, obviously, 8% on the weekly performance here. And we also had really good volume here on the day, which was better than we've seen in the past year, where we've seen it where we've been kind of trading sideways. You can see volume was pretty much flat. But we had a pretty good volume here into the close on it. So the bulls obviously won this time around. We'll see what happens next time, next week as well. Ethereum did the same thing. Ethereum is now at 2,942. It is also, close that. It is right now coming back down a little bit. RSI is also taking a breather. It looks like a little bit right here. Last time we were here, we were back in here. So we're actually up higher in the price. RSI is the same, so that's a good sign. It makes me think that we may come down a little bit more here before we actually end up going up higher, possibly over the weekend. But we'll see how this plays out. There's just no way of telling what it's going to do until it actually does it. Let's take a look at Bitcoin's hash rate. And if we look at it, let's reload it. And it's been kind of flat here the last couple of days here on trading since basically February, mid-February or so, and we've been kind of bouncing between this range here. There was a story also coming out, or I read it just relatively quickly today, that the difficulty has also decreased for the second time in a row. And I think that's possibly because we have been going kind of flat here on the hash rate. All right, so let's take a look at our first story here, which is Sphere 3D. So Sphere 3D announced today that the company was issued a deficiency notice by the Nasdaq listing qualification staff of the Nasdaq Stock Market LLC. The notice was prompted by the company's falling out of compliance with Nasdaq listing rule 5605 C2A, which requires that issuers have an audit committee of at least 3 members who each meet the criteria for independence set forth in Rule 10A-3B1 under the Securities Exchange Act of 1934. The letter does not affect the company's listing on Nasdaq or its operations. So here's what happened. So the company fell out of compliance with Rule 5605 C2A due to an unsolicited discretionary bonus payment made by the company to Patricia Trumpeter, an audit committee member outside of board compensation for work on certain business initiatives. Ms. Trumpeter resigned from the company's audit committee on March 7th, 2022. However, she remains on the company's board of directors. The company is preparing a NASDAQ required plan of compliance, which will include the replacement of Ms. Trumpeter on the audit committee. So obviously a little slap on the wrist for them. They need to be in compliance and get somebody else in basically in that position right now. So not a big deal there. I'm still working on getting the any deep dive going for you guys. I know I've been promising this for the past 2 weeks. I'm working on it. It's been just crazy here at home and at work. So I'll get that to you guys as soon as I can. And hopefully I'll get that finished up this weekend. So we'll have that coming up next week. And then finally, our big story here. It's a long one, so we'll get into it a little bit here. So Ethereum 2.0 coming in Q2 will lay to rest energy concerns, Joe Lubin stated. So here's the interview and the information that we want to talk about. So Consensus CEO and Ethereum co-founder Joe Lubin is still confident that the next era of Ethereum will arrive within the next few months. Last week, during a fireside chat at the Camp Ethereal crypto event in Wyoming, Lubin stuck with the predicted timing. The merge is happening surprisingly on that same time frame, said Lubin. So my estimate stays the same. We have a team working heavily on it. There was obviously a lot of contention saying that, this has been pushed down the road so many times that people weren't thinking it's going to happen this year. But it looks like it's getting really, really close to being completed, which is good. Bad thing is, obviously, we'll talk about this at the end, is for the miners that actually mine Ethereum like Hive and Hut 8. What does it mean for them? Obviously, this is going to be a challenging time for them, I think, switching over to other coins, and we'll talk about it there. Going down here, so a lot of details here. So the next step will transition the current Ethereum mainnet, let's call that Ethereum 1.0, to a sort of ghost network currently operating in parallel, technically called the Beacon Chain. It will evolve into Ethereum 2.0. The mechanics of this transition led the Ethereum Foundation in January to rebrand the Ethereum 2.0 name in favor of Consensus Layer, or in Lubin's words, the Consensus Chain. Beacon Chain isn't executing real transactions right now, but it is instead creating a home for validators, computers that validate the crypto transactions, to lock up their hard-earned Ethereum. It's laying the groundwork for Ethereum's shift from its current method of verifying transactions using proof of work to a different method called proof of stake. And this has obviously been in the planning for a long time. So under the new mechanism, Ethereum validators like proof of work miners are rewarded for ensuring the network is processing correct transactions. Right now, this reward pays out 5.54% in Ethereum to stakers, according to data pulled from staking rewards. However, if validators get caught adding fraudulent transactions to the Ethereum blockchain, they get penalized. This penalty is monetary and gets drawn from the 32 Ethereum needed to stake in the first place in order to become a validator. Okay, so that's kind of how they're handling that. On Tuesday, Ethereum developers announced that they had successfully trialed the merge event on a public testnet called Kiln. The testnet is essentially a crypto sandbox where developers test new upgrades or changes to a protocol without causing serious damage to an actual blockchain network. And it seems to have worked. So it seems, we'll have to have verification on that. Tweeted core developer Tim Bako. Post-merge blocks are being produced by validators and they contain transactions. So that is actually good news there. So they are seeing progress made. It's a small celebration for an incredible technical task, one that is made even more pressurized given Ethereum's current market cap of $337 billion. Once it is executed on the mainnet, Ethereum 2.0, now rebranded from the consensus layer, will be alive and kicking. And they got to take their time. You're dealing with a lot of transactions, a lot of NFTs, a lot of ERC tokens. So there's a lot involved in this that has to be done right in order for this to work, going from proof of work to proof of stake. And there's a lot at stake, obviously. So them taking their time and then being kicked down the road a little bit is fine because you are dealing with so much, basically, liquidity and also, obviously, a lot of money at stake here. But we'll see when this actually happens. So Ethereum 2.0 will bring about several key changes, namely creating an environment where shard chains and roll-up technologies can increase the speed of transacting, as well as lowering costs in theory. So other cryptocurrencies have done a little bit better, I think. One of them is obviously Solana, Cardano. Their transaction speeds are a lot faster. Cardano is also a proof of stake. I think Solana is also. Then you got some other ones that use proof of, history, which is, I'm drawing a blank right now. I'm drawing a blank right now. I can't think of it. But there's another one that does that. So it has to obviously evolve and get better in order to stay in the lead position, I think. The merge will lay to rest proof of work, will lay to rest Ethereum's carbon or energy footprint problem. That all goes away. Lubin said at the camp Ethereum, orders of magnitude less expensive energetically. And another exciting thing about moving to proof of stake is the proof of work requires a lot of issuance of Ether in order to incentivize these people with heavy infrastructure to lend their resources and validate transactions on the network. And so if you have very light infrastructure, then you can issue much less Ether per block that's constructed. So that's where they're going to get into that burning mechanism. So after making Ethereum cheaper and more environmentally friendly, Lubin added that the upgrade will also turn the world's second largest cryptocurrency into an ultra sound money. The term is a play on the idea that gold and Bitcoin are sound money because their supply is capped and not changed. Gold, I mean, obviously you can mine more gold. Bitcoin, you only have 21 million, so I think Bitcoin is a little more sound money than gold. And then obviously ultra sound money goes as a step further. The shift to Ethereum 2.0 will result in a much lower emissions rate, which means fewer Ethereum will be given to validators for securing the network because their operating costs are much lower. Running a traditional proof of work mining outfit, for instance, comes with an enormous overhead and only makes sense if the reward is worth it. Without that overhead, validators remain incentivized to do their job even if the rewards are cut. This in turn means there will be a smaller supply of new Ethereum entering the market, which will make it basically deflationary a little bit. At the same time, Ethereum's latest EIP 1559 improvement introduced a burn mechanism that destroys a certain amount of Ethereum with each transaction. So you're burning it, you're basically taking out the supply of Ethereum in the market. These two changes create an environment in which tons of Ethereum is being destroyed on one end, while fewer Ethereum is being created on the other. Instantly, a dramatically deflationary pressure emerges. So this is obviously, we have a lot of Ethereum out there, and so this is going to help out, I think, driving the price up higher. So this is kind of interesting. Would now be a good time to actually start buying more Ethereum. Ethereum has been being down a little bit, so has Bitcoin, but if this happens within the next quarter to 2 quarters, this is going to obviously drive the price up because supply and demand mechanics are going to go into it as well, and that's going to drive, I think, the price up as well. So I'm possibly going to be looking to get into more Ethereum here. I got a little bit over 3 coins right now. I want to probably get maybe to 5 or something like that, or 10 if I can. But that's obviously with everything else that I want to do. But we'll see. Not financial advice. Do your own research as always. Let me see here. So when the merge happens, said Lubin, we're going to be burning more Ether every single day than is issued. Become much less Ether will be issued to secure the network, and so ultrasound money is about to come into existence. Lubin's comments amounted to a compelling case for a future price of Ethereum, though he was careful to add for the audience and camp Ethereum. This is not financial advice, obviously, and Decrypt does not dispense investment advice either. So that's kind of where I'm standing at with it as well. So not financial advice, but it might be a good time to buy if you have the available money to do it. The other thing is obviously is Hut 8 and Hive. They both mine Ethereum right now. I believe, I could be wrong. I'm going off my memory here, but I believe Hive has like 10,000 coins of Ethereum or something like that, if not more, if not like 20,000 or something like that. So they have plenty of coins that they could stake and do validators for Ethereum if they wanted to and get paid that way on it. They can then use those miners that they have, the GPU miners, for other things, whether it's mining Ethereum Classic or some other coins, or they can do basically compute projects for whatever they might be, whatever that's going to be used for, graphics. Oh wait, there's other things that I'm drawing a blank. But there's other things you can use those GPU miners to do work, and you can also basically loan out those miners for other people to do something with them. Same thing goes for Hut. Hut has been mining Ethereum for the last 7-8 months or so. They started back last year, so they could do the same thing. I don't know how much. I believe they mine Ethereum, but then they get converted over to Bitcoin. So I don't know if they have any Ethereum that they're going to be able to stake. So that's kind of where they're at. But they said they're going to cloud computing as well with some of their infrastructure as well to do that. So we'll see how this plays out. But if that's the case where they're not going to be able to mine Ethereum anymore, they're going to obviously have to do something with getting their hash rate up, probably through ASIC mining, whether that's through Intel. I believe Hive is doing that as well. They're working with them to get their own miners for that. So they need to do something like that to keep their momentum going. But we'll see how this plays out. This is still a couple months out. Maybe by another 6 months or so, we may actually be in this proof of stake mechanism for Ethereum, which would be really good, I think, especially for the price going forward. Not financial advice. All right, let me know what you guys thought of this. Tomorrow we'll do the video on miners versus Bitcoin, see how they did. I think it's going to be a pretty good week for all the miners for the most part. Bitcoin obviously had a good week this week, and we'll see how things go forward. And that's it. I hope you guys have a great weekend. I'll see you guys tomorrow and then possibly on Sunday if there's something good or interesting going on. Other than that, if you enjoyed the video, hit the like button, subscribe. Helps me out tremendously. And I'll see you guys in the next one. Until then.